Good morning, everyone. Welcome to Hit the Bid here on July 20th. This is Ty Robbie here through Week 29 Market Watch. Due to some technical difficulties, our weekend video posted without audio, so we are coming to you here shortly after the Monday morning open. We are going to take a look back at last week's action, see how we kicked off this week so far, and see how we can be prepared as we head into Week 29. First up, we got our August live cattle on the board. This will be the last day covering August, as we are starting to see this live cattle market roll out of this contract and over into October, making that the new front month contract going forward. But for one last time here, let's take a look back at August here for review purposes. Last week's action, we did see steady selling pressure all week long here for this live cattle market. Prices opening up here on Monday, trying to balance out in the mid 230s, but just failing to hold on to these range lows that we've been trading around here for about the past 2 months. Tuesday, we opened up with that gap and go to the downside, slicing right through 234, getting those sellers to push the gas there and start to put the pressure on. All these bulls that have been in this market over the last couple months started to feel the heat and threw in the towel as well, contributing to more selling pressure. This market bleeding lower all week long, finishing down here just off of 224 into the close on Friday, signaling more selling pressure to come, more weakness to come here, technically speaking. We got our major averages all starting to trade down here below each other, giving up a lot of these key levels to the downside, typical signs of downtrend to come here for this cattle market. Jumping over to this October contract, this new front month did finish last week at new yearly lows, closing down here below this March 9th low. At the moment, new lows usually lead to more lows, so look for that selling pressure to continue. Like I said, these major averages all starting to trade below each other. We have seen lower highs and lower lows here, all typical signs of a downtrend to come, technically speaking, for this live cattle market. We have seen about 4 straight weeks of selling pressure, though, here, so if anything, we do have this market pushing into some oversold, overextended conditions to the downside. A near-term bounce wouldn't be too surprising. A little bit of a rally here off these oversold conditions would be expected and would be a good thing to give this market a little bit of a breather. But we still have plenty of overhead supply, a lot of selling pressure that we'd have to chew through. So it's not going to be an easy climb out of here. Look for any sort of rallies to be sold into. We got these major averages starting to come down here, and they will put pressure on price from above if we do see the price revisit it. But look for some resistance all the way up here in the high 220s to the low 230s. Those sellers should keep the pressure on here. Any sort of offers below last week's low at 220.5 should signal some more weakness here early as well. We have seen nice back and forth action here so far off that opening range. No serious directional movement. This market doesn't look like it's in a rush to go anywhere, but any sort of weakness down here below last week's low could signal some more selling pressure here to start off the week, and we could see a nice little poke down here into the 210s. At the moment, the selling pressure is on. The downtrend is shaping up here. Technically speaking, we don't have a whole lot to look forward to. So continue to be defensive, be cautious here. This market is going to try and find its footing. It's going to have to just come down here and try and find some spots to offer some more support. But in the near term, just be defensive here. Be cautious. Let's just let this thing settle up, find its footing here before we get committed to this market. We still have a lot of work to do before we can really commit to a nice uptrend. But at the moment, just continue to be defensive here and let this market sort itself out in the near term. Next up, we got our August feeders on the board. We are seeing this feeder market roll out of this August contract as well. We will take one last look at it for last week's review purposes, but going forward, the September 26th contract will be the new front month. Last week, we saw feeder markets continue to see some downside as well. A little bit more strength compared to that live cattle market. We are still holding on to these yearly lows and just balancing out down here in the around 350 to the 340s. But last week, we did just see steady selling pressure finishing the week just off of those lows here. And so far here on Monday morning, we are getting a little bit of bullish action here, seeing this new front month September contract already up 2.25 today, getting some bids above last week's high, or excuse me, last Friday's high at 341. As we can see here, this market isn't seeing as much weakness as that live cattle market is. September contract here still hanging out in this big picture range we've been in all year long. From the start of the year, we have traded between about 335 and 380 for the September contract, and so far it's looking like we're starting to find some support down here near these range lows. The June 4th low that was put in back here last month, still holding price, but we just want to be cautious of this level. If we do get any sort of offers down here below that low, that will see the seller start to step in and see a lot of these bulls throw in the towel, and that could push some more selling pressure to the downside. All year long, though, we have seen this 335 to 340 area offer good support off that yearly opening range. This retest of it back in March as well as June, seeing good pushback off this area. So look for those bulls to be aggressive here. We got a nice line to trade around here. This feeder market should try and find its footing here in the near term. Just want to be cautious. If we do get any sort of breakdowns below these current year's lows, that'll be the time to get defensive and start to raise cash. But in the near term, this feeder market's looking like it's finding some good support here. We should see this thing try and make an attempt back up here towards the 350. These averages haven't really done much for price here recently, so we just continue to see them cross back and forth. We'll have to wait and see if this market responds to them. If we get back up into that area, but so far looking like these range bound conditions are expected to hold. We can see this thing is split into quarters here. Bottom quarter of this market between 335 and 345 offering good support, while we see resistance up there all the way into last year's highs as well, anywhere between about 370 and 378. Look for this range bound action continue here in this feeder market. If we see these live cattle markets continue to take some heavy fire, it could bring some weakness into this feeder market as well. So just be cautious and get defensive if we do start to get some see this market trade down here into new yearly lows. But at the moment, we're finding good support here, and we should see these feeder prices remain range bound. Next up, we got our December corn futures on the board. We continue to see some choppy action here for this corn market. Last week, we just saw a nice back and forth action across our averages here between about 455 and 475. This market doesn't have a whole lot of structure here at the moment, just seeing some big swings both directions over the last couple months. We don't anticipate this market really going anywhere. We have seen some pretty sticky prices here around $4.50 here recently, so we expect to see this range bound action continue between about 475 and 450. We did get a nice little Sunday night open here for this corn market, popping above our last week's high at 474 and a quarter. But so far here Monday morning, not able to get much traction here. We'll have to wait and see how today's action unfolds. If we do get a nice strong close back here above last week's high, we could see this thing start to dance around these yearly highs we traded in back this spring. But at the moment, this corn market looks like it should just remain sticky in the mid $4 area. Continue to see some wide ranges and choppy action here in the near term. Last week, we saw continued upside for this crude market. This thing getting a nice little bounce here off some oversold conditions. This market rallying right back up into our averages, balancing out late last week before seeing that nice strong finish right there at that 50-day average on Friday. We did get that nice little pop higher off that Sunday night open up into the mid 80s, but as we can see here, we are starting to already run into some resistance. Got a lot of supply overhead here that'll keep the pressure on this market. Lower highs recently. This market will be sold into. We aren't expecting much more upside other than what we've seen so far already. If we do start to get a breakout above this downtrend line here, we could see this thing kind of poke back up here in the $90 to $100 range, but that's barring any sort of escalation going on over there in the Middle East. In the near term, though, we are anticipating this rally to be sold into. Look for this thing to fizzle out and start to bleed back down here into the 70s here before this week is up. Next up, equity markets continuing to see some choppy, mixed action. We continue to see some relative strength here in the Dow index, while the Nasdaq did see a nasty finish last week below that 50-day average. Still holding on to this June low, though, so I wouldn't be surprised to see this thing remain range-bound between about 28 and 31,000. The S&P just continuing to tighten up here. We are seeing higher lows with equal highs, so this market is kind of coming to a head here. Look for this thing to make a decision here soon, but in the near term, we should see some more choppy action. This thing is just kind of getting some tight little ranges and settling in here. The Dow continuing to push into some new all-time highs, trying to find some support at that 20-day moving average. Seeing some weakness here so far. We could see this thing pull back down into the 50 as well. The Nasdaq needs to find some support and stay range bound. A lot of these big pieces of the puzzle here are still seeing some pretty mixed action. Nvidia is still trying to find some footing here. Apple is a true leader, pushing up into some new all-time highs last week, coming off those highs here to start off so far. But we got a nice little uptrend looking here on Apple, so that'll be a true leader. Look for a lot of these other names to continue to build some nice bases. We're starting to see some of them find their footing, put up some good structure. We got some good points to trade around with some monthly high breakouts forming. But one thing to be cautious of going forward, we do have some earnings coming up here in the days to come. We got Google coming here this week. A lot of these names over the next week to 3 weeks here will be reporting earnings, so that's going to be adding some volatility to this market that's been pretty choppy and sticky recently. If we see some good things coming out of those earnings releases that should give this market the strength it needs to push off these range highs and continue with that upside momentum. But in the near term, look for this choppy action continue. We need to see these mega cap names, all these big pieces of the puzzle, continue to find their footing, build some good bases here, and get some positive reactions to those earnings announcements. So that should get this market pushing back higher. At the moment, though, we should just see some more choppy action here while we continue to await all those earnings. That's all we got for this week. We will catch you tonight for closing comments. Thank you everyone for tuning in, being patient with me this weekend. We'll catch you guys tonight for closing comments. Thank you and have a good day.